even having a smartphone, you're not going to be able to get 4G.
Yeah, that's the main reason I feel,
Yeah.
because they must be having more number of feature phones
Yeah.
with basic functionalities. And cost is one reason, habituality is another reason. Though smartphone penetration is increasing, but maybe in the youth, the people old age and mid age, they are more comfortable with feature phones. So that's the one of the reasons I pursue.
Yeah. No, absolutely, and I think it's a valid reason. I think the big one is the fact that there's already 39% today, but only 3% of the transactions are happening through smartphone. Right? So the ability is there, but there's still a huge gap between those that have smartphones and are not using it for that. So, which I think is where we're struggling to find that.
Yeah, just for curiosity, what is the size of the global telecom market? What is the size of the global telecom market?
Telecoms market?
Yeah, telecom market.
And
The reason I'm asking is, do you think there are any implications in terms of investments and scalability for the telecom market to respond to these opportunities?
Yeah, so I don't know if this is going to slightly answer your question, but there was a World Bank IMF report released about 2 weeks ago, which says in Africa it'll cost $100 billion over the next 10 years to give universal access to good internet in Africa. So that's a $100 billion investment, which is significant, and I think to attract that level of investment is going to be a problem for Africa today. And especially if you look at the return on that investment, when you look at voice and data services, so if you don't have these other types of adjacencies, it's going to be really hard to convince shareholders to invest that level of money to build out the connectivity. But that is where we have to look at better infrastructure, lower cost infrastructure that can really make that investment go further. Yeah.
Fraud statistic maybe issue USSD vs application.
So again, I think it depends on different operators. I would say today USSD has higher level of security, not because of the security in the USSD encryption layer, but just the fact that it's attached to the SIM card into that mobile device. The apps typically is detached from the SIM. So once you have an app, you don't have to have the SIM card in the wallet. Yeah.
Yeah, but yeah, I understand that part, but because there's issues depending on the country or the region.
Yeah.
Well, somebody can steal your phone or your SIM card. He's totally controlling maybe your money. That's why I said, is there like any statistical proof of that the USSD is more secure than the application? Well, this is the theoretical that the USSD is more secure. What is there like a fact?
Okay, so I guess if you compare, really the mobile phone in the SIM is a payment instrument, right? Your store of value is sitting on an account, right? So if you compare it to bank, it's like your bank card. If your bank card gets stolen and your PIN is somehow exposed, the same risk, right? So if your phone gets stolen, the customer has to, or the fraud thief needs to know both your PIN and get access to your phone. So he has to steal your phone and he has to know your PIN. So I'd say the level of basic security is the same as a typical card that you carry in your pocket today or in your wallet. I'd say that the challenge today and why financial literacy is so important is that the people that we do deal with once you go into this financial inclusion drive is people that are not familiar with fraud and that types of fraud out there. And that's where the risk is today for us.
I fully agree with you. At least my perception is that. And maybe poor infrastructure, poor network connectivity, all these things must also be additional factors. But yes, eventually this will change. If you see the latest figure, which I have not seen, but I'm very sure 2019, 2020, this is going to change. Ultimately, app will come and take over the things.
Yeah, but this is purely smartphone penetration, right? This is not even the adoption of apps. This is just people having access to a smartphone and access to data services within that region. So the level of app adoption we expect will be lower. Yeah. Yeah. Well, this is up to 2025, right? So we predict by 2025, based on the current growth rate, that in sub-Saharan Africa, 66% of the population. This part, yeah. Yeah, I mean, I would really hope that it grows from 97% to lower. I hope it's not going to be the same year. Otherwise, the Z's not going to invite me back to this meeting. So just a little bit, and I think this is another interesting fact within Asia, is if we look at the profitability of these businesses, the challenge is that within Asia, we see that a number of the operations and mobile money providers are struggling to scale or get to break-even point. And I think that to a large extent is driven through the competition in Asia. So having spent some time working in operations in Asia, the level of competition and a lot of VC money that's going into the payment space, a lot of young startups, and a lot of that is driving this cashback. Someone mentioned about the cashback models. And it's unfortunate because typically these young startups can't really scale. So they have maybe a 1 or 2 year runway where they're able to invest and drive a lot of this payments behavior and for lack of a better term, destroy value in the market. So they bring the prices down, and those prices can never go back up. But they can't survive. There's no real business model. So they run this really negative margin businesses for a year or 2 years, realize that they can't scale, and then exit the industry. And unfortunately, those players that are still around are not really able to then monetize the business going forward. And that's a trend that I've seen a lot in a lot of the Asian markets. The ones that have been successful, again, is the players that have already scaled. And we spoke about the WeChat, Alipays, Gojeks, and these types of players that have other adjacencies. They make their money on ride-hailing or other services or advertising services. Payments are not really a revenue driver or a business driver for them, so they can offer it for free, but they were able to monetize their business somewhere else. But then you have to have scale, and that's what they've done effectively. And unfortunately, a lot of these players that are in this space that are struggling to really continue offering these services within Asia. The picture, obviously, in Africa and a number of the other regions is much more optimistic for the operator, but it is something that we also have to be sensitive to change in future. And when I talk a little bit about payments as a platform, why that's important. Yeah. This is looking at, so I think this is the global number that we're presenting, but most of Asia is sitting here. Sitting within this. Yeah, this is the global then. So this is most of the Asia sitting in this area. So talking a little bit about these mega platforms and fintech players out there, if we look at kind of the journeys, so mobile operators kind of started in this payment services space. Obviously we were telecoms, but then launched the payment services, and a lot of mobile operators are now kind of going back down this model, moving towards commercial platforms and social platforms. So we've seen a lot of mobile operators, especially in Africa and some in Asia, that are launching chat services and trying to compete with the kind of big tech players. Not so successfully in a lot of cases, but at least they're trying to do some building some adjacencies out. And I think the e-commerce players are the ones that are typically more attractive. I think the competing on the social platforms is really difficult and not something that really mobile operators are able to do successfully. But we've seen a lot of operators that have gone into e-commerce type solutions and offering their own e-commerce products and services. We've seen some of the big ones like Jumia, Uber, and these guys launched payments. Then we mentioned about Grab. There's a couple of Latin American players, and there's Alibaba also that's moving into this space and going into the more formal financial. I mean, Alibaba offering loans and all of these kind of formal financial services, doing a lot in data analytics and able to monetize a lot of different areas that traditional players or traditional mobile money players are not able or have not been able to do successfully. Then we talk about Facebook. We're all familiar probably with Libra by now and what's going on in that space, and then Tencent. So these are kind of the core ones that we're looking at. Definitely kind of the trajectory is moving across from these social platforms to payments to more formal financial services, and some trying to pivot back that has not kind of create that full spectrum. And really when we talk about this payments as a platform models that are emerging across different regions. Yes? Sorry, the last one is non-transactional financial services. So these are looking at loans and like credit products and things like that, where we're not talking about peer-to-peer sending money, receiving money, international remittances, bulk payments. We're actually talking about offering financial services that are not transactional based. Insurance, these types of things. And then data score like data analytics, which you see in the retail space. So when asked the mobile industry kind of what are they looking at, what are the strategic priorities, the ones that stand out especially, so this is what kind of the global response was, this is what the Asia response is. I think the ones that are interesting is the banking integration. So this is something that's happened many years ago in Africa, in like I'd say in 2010s already, mobile operators started integrating with banks and saw the opportunity there. So, and again, as I mentioned, the huge cost in caching, which drove a lot of the costs for the business, and then allowing that cash to flow in from the bank digitally, obviously brought costs down significantly, and commission costs paid to agents. So to fund the wallets and to fuel the transactions, getting it from the bank, which is already digital, is a much better place to get money flowing into your system than getting it from the agent, which is coming in cash, which is usually it's much more costly to digitize. So we've seen in Asia that there's a lot of big push for mobile platforms and mobile money providers to integrate now with banks and create those financial services ecosystems. So that's a very important one. Increasing rural penetration, I guess that's a big push everywhere. Brandon is doing some work. So there's a big push for increasing the rural penetration. This is building out agent networks. And like I said, I think today, for most of us, the strength in the mobile industry is the ability to build out this agent networks. Because it's something that we've done as a mobile industry for many years, and selling our vouchers and selling our SIM cards, going to those rural villages, putting up towers. So we've always been there, similar to Unilever and Procter & Gamble and these FMCG players. Mobile operators has always gone to those remote areas to sell their products and services. So that's why we were very well positioned when we launched mobile money, right? So for us, this is a key part of what we do, and really sets us apart from banks and a lot of these fintech players out there today. If you think about Gojek, you think of a lot of these fintech big platforms, they're really dealing with digital customers, the urban, semi-peri-urban customer. They're not really going out to those remote locations where there's no physical addresses, there's very limited road infrastructure and things like that. The e-commerce players are not really going out there. They're working with the urbanized customer that has either some access to ID, physical address, and all of these basic fundamental customer identifiers to be able to deliver their products and services. So they're not going to go and register a customer in a remote location. They've not done that very effectively. So that's still a very key part for the telco industry. And then the OTC migration, I think it's the slide. This one, which is talking a little bit about the shift. So a lot of players still in Asia is, the over-the-counter model, where instead of having a mobile wallet, you'd go to the agent and do the transaction through the agent. You give the money to the agent will then transfer the value, and the recipient will go to the agent and collect the value. So it doesn't actually get digitized through the customer. So we've seen a shift here, especially in Asia, where it's gone from 108 to 67, so this is the global average. And the benefit is really this opportunity in growth. We see that the non-OTC transaction has a significantly higher revenue per customer. because they start using other services and buying other things other than just doing a remittance. So for the industry, that's quite a big shift, is to get people to actually get a mobile wallet instead of doing it over the counter. How are we doing on time, is it? Sorry. 18 minutes. So I'm going to quickly run through this slide. This is basically on the ecosystem. If we look at the global average versus what's happening in Asia. So if you look at the number of connections that a mobile money platform would have globally versus what we see in Asia, we can see that Asia has a number of more merchants on average. So they're online merchants, and this is what we expect to see in Asia because of the level of e-commerce adoption and smartphone penetration. That there's much higher number of online merchants. On banks, slightly lower, but it's kind of on that global average. On merchants, this one is still lower based on the reports that we're getting, which I was quite surprised at. I thought this would be higher in Asia by now. I've seen, I think there's a lot of big push on this cashback models in Asia. And to be honest, mobile operators have not done this successfully. I think merchant payments is still a big problem globally for mobile operators. So I'm not going to try and tell you that we're doing it very successfully. But this is an area that, for the future of the industry, we really need to crack. It's really kind of the holy grail of mobile money is to get merchant payments going, because it will significantly reduce the cost of the services and stop people going back to cash. I think the statistics still today is that 75% of the revenues generated are cash-out revenues for the industry. So for mobile operators, 75% of their revenues generated from cash-out. And that means the money is going back. It's just very expensive. It's where the customer's paying the biggest part of their cost for the service. And if we can keep the money digital, we can reduce the cost, which will drive financial inclusion and really get us to the most marginalized people to start using these services. So looking at a little bit kind of like where the industry is going, we see that e-commerce growth is 79% in transaction growth, which is great to see. The 26% of the mobile money deployments are building enterprise solutions, so there's definitely a focus on enterprise. And this is just looking at the ARPU for operators that are offering savings or credit products or insurance, that they have a much higher activity rate. So you can see a higher ARPU, but also 46% higher activity rate when you start offering more formal financial services. So when I refer to savings, these would be like products like Mswari, where typically operators tie up with banks, allowing customers to move value from their wallet to a bank account that is linked to their mobile wallet, and then they can earn interest. They can actually get access credit on that account, and then the only way to get money out of the bank account is back through the mobile wallet. But typically there's no fees charged between that movement of value. So a customer can put money into that account and remove it from that account at no cost. But it allows the customer to get a credit score with the bank, so get access to credit and probably other insurance products. The only thing that the operator doesn't want is the value to flow out through an ATM card or somewhere else on that side, because they had a cost to digitize that money when it came into the system, and if they can't monetize it, when it leaves the system, it's not really a great transaction for the mobile wallet provider. So they want the money to go out through the same channel that went in. So that's typically the savings and credit cards. Yes.
Thank you. Hi, thank you very much. I'm very impressed with what's happening in this space, and someone who was working in this area in rural India on a USAID funded project in the microfinance space. A key obstacle I faced there was at times lack of phone coverage. What are the solutions that are currently in place that can address lack of connectivity? You may have a mobile phone, the customers may be able to use it and use the programs, great program, but there's often no coverage. What are the technologies out there, or are there solutions that are able to address that?
Build more towers.
Build more towers.
Yeah, I mean, I think there's a number of things that the industry, obviously it takes investment, right?
Yes.
Really today the only solution is to put more coverage and more sites out there. India, it's a massive country. I think one of the biggest challenges in India is spectrum.
Yes.
And access and pricing of spectrum. And that's a big barrier today, because it's hugely expensive when those spectrum becomes available, the prices that are charged for operators to get access to spectrum. And that typically eats into the investment into rollout of coverage. And then, the other point is probably the return on that investment. So there is today a barrier when you look at the cost of that power and the maintenance of that power. The more rural you go, the more expensive it is to put that power, because typically there's no electrification. So you've got to use diesel or generators to power that power. That's expensive. To maintain and service that power, there's probably no roads to those remote locations. And sending teams out to go and service those powers, it gets more and more expensive. So the more rural you go, the more expensive it becomes. And the customers typically in those areas have less of a revenue drive. So it becomes more of a CSR project than it is really of a commercial business model. Right? And that's where you really then have to evaluate where do you build your powers and the investment that you're going to make. Obviously, we're always looking at how do we reduce the cost. I mean, there are some new solutions and low-cost tower solutions that are becoming more available. As solar is improving, the opportunity to use solar. I know that in Zimbabwe they've used the Tesla power banks, those power walls. They've converted a lot because of the challenges in Zimbabwe today. So they've actually got Tesla power walls now powering their sites. Obviously, it's not a cheap solution, but it is an effective solution. But these are the things that developers are looking at: is how do we reduce the cost and bring in rural power, and look at private-public kind of partnerships to roll out some of these investments to make sure that we do cover this. So there are these initiatives, but it's just not scaling as fast as probably everyone would like.
Okay, thank you so much.
So just moving, I'm going to skip through this. This is some of the things that are happening within the industry. Just looking at last kind of points on the regulation and what are some of the key developments. Data regulation is a big challenge in a number of regions. I think in India also that's a big problem today, is data localization, where governments want sovereignty of data, customer data. This is obviously not great when you think about scale and you think about using services like Amazon Web Services and a lot of this kind of cloud-based services, which can bring down costs. So in a lot of markets, also in Africa, this is a big challenge where governments want data to be localized, local service, and this is across the board. So even MasterCard, Visa, all of these players have to invest in local infrastructure, host all of those customer data and transactional data locally, which doesn't really help scale these services and make them more cost effective. And ultimately that cost goes to the customer at some point in providing access to those services. So this is really an area that needs help, and I think better policies to help unlock this opportunity and look at how do we host these services. I think Philippines has been quite forward-thinking. They recently launched this cloud-based banking services, which I think is key for the industry to bring down costs. Taxation, I think I already mentioned, but this is a big challenge in a number of markets. Governments are seeing the opportunity of taxing these digital services and the mobile money services because they see the huge value that's flowing around, and they think, let's put a 0.5% fee on, and that will help us close our deficit in our budget. Unfortunately, it's also doing the reverse on financial inclusion because it just pushes people back to cash. And when we talked about merchant payments, this is really where government can help, is by introducing subsidies for digital payments. If you want to reduce costs in cash, this is an area where you can do it, right? Is through putting in place, and I think India, again, is a great example of political will in introducing things that enable people to shift from cash to digital. And the long-term benefits of this is huge. So, and this is where government can really help drive the adoption of digital payments across the state. Like I mentioned, I already spoke about cross-border remittances as key. A number of governments are introducing national financial inclusion strategies, which is great. And it's really a good way for government and private sector to work together towards common goals. And we find that really positive. I spoke briefly about know your customer requirements, and typically most markets this is quite positive, but ID is still a big challenge. I don't know who was at the ID session earlier today, but I think this is really important for the industry, and I have a couple of slides. I'm going to jump to this. This is a tool that we have. It's called the Regulatory Index. So typically for governments, policymakers, you can go onto the website. It's just basically a snapshot of how enabling regulation is for mobile money. It looks at these kind of 6 core areas. I think it's around 80 different points that we measure across within those 6 areas. So this would be an example of what it would look like if you do a comparative on different markets within Asia, what they score, so how enabling is their KYC, what are their transaction limits. This is all relative to what the industry is. But please go have a look around. There's also a link where you can email us if you have any questions on this one. I know this typically draws a lot of questions, especially from regulators when they see their own country up there. So I don't want to get too tied up into this discussion, but we're more than happy to answer questions on this. We're doing a next round of this by end of the year, so the guys are busy doing the surveys. And this obviously, if there's any regulatory changes in the last, say, 12 to 18 months, it would not get captured yet. So we try and update it as frequently as possible and make it as up to date, but obviously it takes us a bit of time to capture any new changes to regulations that have happened. So this is on ID. Mobile operators, key one for us, and biggest challenge around access to both financial services and telco services. Right? I think there's around 1 billion people today that don't have access to formal identification. That means that they're excluded from telco and from mobile and financial services globally. Right? So this is a big challenge. If we can't address this, we can't get people into a number of these services.